Today in this video, I want to share with you the only price action strategy you're ever going to need to trade as a trader. There are countless of strategies you can trade as a trader. When you're trading, there are several ways you can trade and make money out of the market. But the question is, are you supposed to trade all the strategies? If you're a beginner, you have been trading for some time and you're not profitable, maybe you're trying to trade all the strategies at the same time. But what you have to do is that pick only one, like the one I'm going to teach you today. You pick only one that you master and then you trade and make profit out of the market. Then later you learn and add one or two. So today I have chosen one of my best price action strategies that you are going to trade. So if you are ready, then let's get started. But if you're here for the first time, you know what my numbers are very small. Hit the subscribe button and subscribe to my channel just to help to push my channel through. Or if you are my old subscriber, then hit the like button, okay? Just to help to push the video also through, because the channel is very small. The channel has to grow, right? So help me to do that. Just take 1 minute and do that. Okay, now let's begin. So as a trader, before you can make money out of the market, you must have a winning trade, right? And before you can have a winning trade, you must have a good strategy that can win. If you don't have a good strategy that can win, then you can't have a winning trade, because in trading, we make profit when you deduct the losses from the wins, and then the balance is your profit. So if you don't have a good strategy that will give you a winning trade, then in the first place, you're out of the game, right? You cannot become profitable. You cannot build a profitable business if you don't have a winning strategy. So now, my strategy that I want to share with you today is the breakout continuation strategy. This is one of my favorite strategies I've been trading most of the time. So today I want to take my time to explain to you step by step where you're going to trade it and make some money out of the market. The breakout continuation or trend breakout strategy. The trend breakout strategy or the breakout continuation trading strategy. Most of you have been seeing me trading this several times, but some of you don't even know the rules, what you're supposed to do, when you're supposed to take the trade. That's why I'm here today. So for instance, we know that market always makes power move and retrace and power move again. Now, you want to join the trend. There are two ways you can join the trend. You either wait for the market to come back down, and then maybe you have a moving average or a trend line, hit the trend line and move forward, and you join the trend forward. But it's not always that the market happens this way. Sometimes this is what happens. Sometimes market makes power move, retrace, power move, and instead of it to retrace, it rather consolidates. So this is where we are looking for. So when market consolidates, what you have to do is that you draw your line, and when market breaks out of the consolidation and come back, retest, and then you enter your trade. So the first one is what? The first one, power move, retrace, power move, and then you join the trend when the market hits a trend line. Then ride the market up. But it doesn't happen like this as beautiful every time. So sometimes when you're trading, you will see either this one or you see these variations. So the strategy says that you must see power move, retrace, power move, and then there is consolidation. And when the market breaks this consolidation, you join the trend. When the market retraces back and you join the trend. This is the breakout continuation trading strategy. But the question is, how do you trade this, and when do you have to trade it, and on which time frame do you have to trade, and what do you need to trade it? Let's start with the first one. What do you need to trade it? This strategy, you need moving averages to trade this strategy. And what are the moving averages you're going to need? You need moving average of 50, moving average of 100, and moving average of 200. 50, 100, and 200. These are the moving averages you're going to need to be able to trade this strategy successfully. So what you have to do is that you plot your moving averages on the chart. Let me show you. So let's say that these are your moving averages, right? You make sure that the moving averages are all in sync. So let's say this is 200. Let me clean this one. Let's say this is 50. And let's say this is 20. Before you can take this strategy, make sure that the moving averages are in sequence. If the moving averages are in sequence, it shows that the market is in the trending phase. So the first rule is that make sure that the market is trending. The market is in the trending phase. If the market is in the trending phase, then the 200, the 50, and the 20 will all be in sequence. The 200 will be down, 50 up, and the 20 will be up. Or you can see that the 200 will be down. You can see the 100. If you have 100, you can see the 100 in the middle. Instead of 50, you can use 100, and then you can have 50 or 20 also at the top here. So you can use either 50 moving average 100 moving average or 200 moving average. But I don't like plotting all these moving averages on my chart. That's why I always choose three, either 200, 50, and 20, or 200, 100, and 50. Very simple. So let's assume that you decide to choose 200, 150. So when the moving averages are in sequence with each other, that is when you are ready to search for this particular pattern, because it is a trend continuation trading strategy. If you want to trade any trending strategy, make sure that the market is already in the mood to trend. If the market is not in the mood to trend, then you cannot trade trending strategies. So the first rule is that make sure the market is trending. And how do you know the market is trending? One, you can use the currency trend meter to match the strongest with the weakest. Or if you don't know how to use the currency trend meter, just plot your moving averages on the chart. And when you open your chart and you realize that the moving averages are in sequence, it means the market is trending. Then now you search for the pattern. You search for the power move, you trace power move, and you search for the consolidation. And when market breaks this consolidation, you also join, you buy, and then you join the trend up. Very, very simple. Do you understand? So with this strategy, let me show you real examples on the charts, and then you see how I traded some of them, and you also become familiar with them. So let me open the chart and let's see. So this is example on the chart. This is a trade I took some time ago, and as you can see, this is NZD JPY, and this can be traded on any forex pair, okay? Any forex pair at all. So this is NZD JPY for today, and I traded it on the M15 time frame. And as you can see the strategy? Can you see the setup? Yes. Can somebody show me? Can you see? Yes. We are searching for what? Power move, retrace, power move, and consolidate. And when market breaks the consolidation, comes back, we take the market and we ride the trend up. And as you can see, this was my entry some time ago. I took the market here. My stop loss was here. My take profit target was here. Risk reward of 1:2. So you see the setup is there every time. You open your chart and you see this every time. So when you open your chart, the first thing you have to look for is to make sure that the moving averages are in sequence. So let's see the moving averages I have here. This moving average is 200. This moving average is 100. And this moving average is 50. And we are on M15 time frame. So you can trade this strategy on either the M15 time frame or the H1 time frame. So H1 or M15. And what do you have to look for? After you see that the moving averages are in sequence, you must search for power move, retrace, power move, consolidation. And when the market breaks the consolidation, you enter, you join the market, and then you ride the market up. Very simple. So that's the first rule. The second rule is make sure you wait for confirmation pattern, because if you want to get more of them to be wins, then when you have a confirmation pattern, it's rather increase your win rate ratio. So as you can see on this chart here, I had a confirmation pattern here. That was the bullish engulfing morning star, bullish morning star pattern. And this pattern is always what I trade most because I like this pattern a lot. And this pattern says that you can have one bearish candle, and you can have one small doji candle and another bullish candle. When you see this pattern, it has high probability of winning. So you just enter here and then you ride the market up. Very simple. So you can see on the chart power move, retrace, power move, now consolidation zone. Then the market breaks the consolidation and then we traced back and I took the trade here. I joined the trend upwards. Risk reward of 182. Very simple. This strategy is very easy to trade, and this is the only thing you're going to need. If you're a beginner, you don't need to be searching for millions of strategies. Just search for only one strategy and master it, because until you master one single strategy, you cannot become profitable with it. Because you can see sometimes you can see different variations of this same setup. So keep the structure in your mind. This is the structure. So when you have the structure in your mind, now you search for the different variations this structure can give you. Do you understand? You search for the different variations this structure can give you. This strategy happens most of the time in trending markets. So if you're able to master this strategy alone, you can become profitable trader. You must learn to master strategies, because you cannot be following signals. One more, guys. One more. Don't be following signals, guys. Sometimes I wonder how people want to trade and be following signals. Why should you follow signals in the first place? Do you think signals work? I'm telling you for a fact that signals, they do not work. Sometimes there are some things I don't want to say because if I say something negative about somebody's channel or whatever, YouTube may take my channel down. So some things I don't have to say them. But I'm telling you for a fact that if you follow signals, you cannot become profitable trader. Signals do not work. Don't follow signals. Okay. Sometimes people send me a message asking me, "Sir, can you send me a signal so that I can catch 50 pips and make profit?" And if you ask me those questions, it gets me angry. I get very angry because it means you don't know what you're doing. It means all what I'm talking about on my channel, you still don't understand. Have you ever heard me talking about signals in the channel? Have you ever heard me talking about I'm creating a signal group so that I'll put a signal inside, and when you join the group, then you begin to trade with signals and become profitable, guys. If you want to take trading as a career or as a business, side business, then you have to learn and master it yourself and trade for yourself. Don't be following signals. Signals do not work. Okay, signals do not work. You must understand what you're doing as a trader. You cannot be following signals so that the person will just send signal. Yes, it's ready to buy. Then you buy. It's ready to sell. Then you sell. Do you know why you can't follow signals? Because trading is a business on its own. There are down times in business and there are up times in business. If you follow signals, you will not be understand this whole structure in business. If you are serious, then listen to me. If you're not serious, you can just leave right now and leave the channel. But if you're still listen to me, you cannot build a business without knowing the structure you're going to go through in the process. You must know whatever you're going to go through in the business, which means in business, there are down times and there are up times. There are times where the business will not be going well. There are times where the business will be going well. But because you have mastered the business, the act of becoming an entrepreneur or the act of building your own business, you know what to do or you know how to go around it. But if you're following signal, somebody is telling you when to buy and when to sell. Yes, it's time to buy. And I send the signal and it was working. Guys, don't follow signals. Signals do not work. So don't ask me those questions again. Because if you ask me those questions, you should understand what I'm teaching on this channel. Learn to trade for yourself. Because you want to take trading as a career or a side business. And maybe one day you quit your 9 to 5 job and then you'll be able to trade and become free. And you also be able to start different businesses aside forex, right? But if you don't take forex serious and you want to follow signals, you are lazy, you don't want to learn for yourself, guys. You want somebody to fish for you every time, then you can never become profitable trader because you are waiting for somebody to send you a signal. Yes, buy, let's buy. Yes, let's sell. You don't know the analysis the person has made. You don't know the kind of analysis the person made, and you are trading the person's signal. Does it make sense to you, guys? Let me give you a scenario. Let's take driving school, right? If you want to learn how to drive, and you learned how to drive, when you go to a driving school, there are some things which are subjective because driving is subjective. And learning the driving itself is objective, which means when you go to driving school, they will teach you the objective parts. So they will teach you how to drive, how to apply the brakes, how to turn, where to pass, when to show translator, when not to show translator, when to stop and when not to stop. But after this, whatever is going to happen on the road depends on you, the driver. You can be driving on the road and then you see a child is crossing and you call your instructor to say, "Hello, instructor. A child is crossing. The traffic light is not is still green. What should I do? Should I hit the child or no? Whatever is going to happen on the road is subjective. The same happen in trading. It's just like driving. It's like driving a car on the road. You have to decide what you see is what you do. You can see that when you went to driving school, they told you the when it's red, you stop. When it's green, you go. So when you see a child even crossing, or you see somebody crossing, or you see something happening in the middle of the road and it's still not red, you still hit the person. You can't do that. Or when you see a pothole, they told you that when you are going and the road should just speed up, and you see potholes on the road and you are still speeding up, you are going to die. The same happens in trading. Trading is subjective. So after you master the art of trading, now it becomes subjective business. It's subjective. Subjective means something that is not specific because every day you're going to see different variations and different things in the market. This is why you must learn how to trade for yourself. You should not rely on signals. Learn how to trade for yourself. Join a webinar program to start learning or join a mentorship. Good. Let me chip in this one. November is coming and November is my last mentorship program. So anybody who's interested can join my mentorship program. Join a webinar or read books. Books contain knowledge. Join a webinar, read books, and master the act of trading. Trading is very subjective, so you cannot just be playing around and waiting for signals. Learn and master trading for yourself. There are two ways you can learn and master trading. One, going through your own path, that is learning on your own, and two, getting an instructor or a mentor to teach you. So one, let's take the first one, going through your own path. Going through your own path means that you decide to learn it for yourself. You take books, you read books, okay? Google is there for you. Google is your friend. You take books, you read books, search for books, trading books, so that you learn more from those who are writing these books. The authors who wrote these books, they have more knowledge and more experience in the market. So you buy their books, or maybe you just go online. Some of the books are free. You download them and you read books, and then you practice and you read and practice and you read and practice and read and practice. And then over a long period of time, you're able to gather some information for yourself, you're able to gather your own style of trading, but it's going to take you a longer time to do that. If you don't take it, it can even take you 2, 3 years, even 5 years before you can find it out yourself. That's why it's good if you join a mentorship program or maybe a webinar program. If you join a webinar, the person is concising everything for you, right? You get everything in concise form for you. The person experience over a long period of time. Now you learn it and now you begin to practice it on the chat. So for instance, for my mentorship program, if you join a mentorship program, you join it for 3 months, right? So level 1, foundation level, level 2, technicals, level 3, practicals. You join this for 3 months. Then after the 3 months, instead of you to spend 3 years, or instead of you to spend a whole year, or maybe 2 years, you just learn for 3 months. You just sacrifice your 3 months and you learn the right skills. Instead of you to just keep searching yourself, keep searching and keep worrying and keep losing, just join a mentorship program, and then by 3 months you have the foundation knowledge you're going to need. You have all the knowledge, the skills you're going to need to trade as a trader. Then now you come to your chart and you apply the knowledge on the chart until you become good with it. When you become good with it, now you begin to make profit out of the market and you can take trading as a side business or as a full-time business. That's it. Join a webinar or join a mentorship program just to cut your learning curve very short. At least you will learn something, right? You learn something. You also join my mentorship program. Sometimes they ask me, say, why do you take only 10? Why don't you open it up? But the purpose is not to open it up for so many people, but to open it up for those who are only serious to take trading as a full-time career or as a full-time business. My purpose is not to open it up for more people. So I just take only 10 per class, only 10 per class. So I put them into group 10, and then I will be able to monitor them. I give them work to do, they work video lectures, and then I interact with them one-on-one to see what is wrong with them individually, because trading is an individual game. You cannot trade in a group. No. Who told you trade in a group? So somebody will create a group and say, hey, I'm turning signal, so buy when it's ready. Guys, we don't trade in groups. We trade individually. Trading is individual game. So in my class, what I do is that I put them in a group, but still I interact with them individually. You cannot interact with other person. I interact with them individually to see whatever is wrong with them. Okay, this person answered this correct. This person answered this wrong. This person did that. This person did that. So because of that, I know where to pinpoint and correct you. I know what you are thinking in your mind, because trading is an individual game. When you finish the mentorship program and go and sit on your chart, you're going to trade individually. That's how we do trading. Okay, that's how we do trading. So you can learn it yourself, or you can join a program, or you can join a webinar. You can join my mentorship program for November. November is the last one we are going to have for this year. Okay, so the year has ended. You stay there like that, you didn't learn anything, and you are still messing up and wasting your money. You are welcome to join it. You are welcome to join my mentorship program for November. Okay, November. This is the last batch I'm taking for this year. So November, you learn it for November, December, and January. You are done, and you'll be able to now begin to trade on the market. Yes, very short period, 3 months. If you're able to dedicate these 3 months to learn, then by January you'll be good to go, right? You begin to now apply whatever you've learned on the chart. But if you're not ready to learn, then don't trade on the chart. Just keep your money. Okay, don't trade. Keep your money and keep it in your wallet. Do not trade, because if you attempt trading without any knowledge, you're going to lose your money. So find books and read, or join a mentorship program or a webinar program. These are the two options you can take. So you have to sit down and say, okay, do I want to do it myself, or I want to get a helping hand? That's all. Then after that, you come to the chat and then you apply your knowledge. Guys, you apply your knowledge. After that, you have become a master trader yourself. So you're always welcome to join the mentorship program for November. You can register any moment from now to maybe 5th November. So from now to 5th November, you can register for the mentorship program. And this is the last one for the year. This is the last mentorship program for the year. So I think this video is taking long. Keep the setups in your mind. Master the strategies I've taught you. Practice them, guys. Practice, practice, practice. Practice them and become profitable trader in the future. That'll be all for this video. This is What's Your Mentor.